So the first quarter saw the market retreat, and that was after an unprecedented period of about 16 months where for every month the market just continually went up. And this change in sentiment was really, I think, just because the market for the first time got focused on the fact that there seems to be some tightness in the labor market in the US, and they worried that inflation might start to creep up, and that might force the Fed to raise interest rates more quickly than generally anticipated. So this change in market sentiment, I think, really just means that the market's going back to a more normal kind of situation, and we've really been for the last almost year and a half in some kind of fairy tale scenario where the market just continually kept going up, and that clearly was unsustainable. So I don't think people should panic too much about the slight setback that we've seen in the last quarter. I think that looking ahead, things are looking quite positive. So buoyed by a very positive situation in the labor market in the US, consumer confidence remains very high, and we've also seen, or we haven't yet seen, the positive effects of the tax cuts that were announced a couple of months ago. So we think that consumer spending in the US should be quite robust for the rest of this year. If we look at business confidence, that also is still at quite high levels. And even though we don't think that business investment will remain at the kind of high levels that we saw last year, we think that they'll remain quite steady and supportive of the economy. So we think that the US economy will perform quite well for the rest of this year. And if it wasn't for the uncertainty caused by the imposition of trade tariffs and fears about a potential trade war with its major trading partners, we think that exports from the US should also do very, very well. And that would be boosted to some extent by a weaker dollar. So all in all, we think that the prospects for the US economy looks pretty good, and that will be supportive of the synchronized global growth that we've seen, which are also supporting markets in Europe and in emerging markets.